What's going on, guys? Hope you had a good long weekend so far. Today we're going to have a look at some stocks that aren't in the microcap space. So May was a really good month for me for microcaps. I basically exclusively traded microcaps. I didn't post any videos really because I can't post videos on things that I trade for like 15 minutes. So there's no point. So now it's looking like it's more like small and mid cap season at the moment. So I've stopped trading microcaps as much. June is end of financial year, which is usually traditionally the worst month statistically to trade. Whether it's small cap, mid cap, micros, doesn't matter. Across the board, it tends to be terrible, or at least more difficult. It's not impossible to make money. It's just more difficult. So I've got to be a bit more picky and choosy. Now, this is the Dow Jones, and we can see on Friday it pumped up 3% because of unexpected economic data. Or rather, the results were unexpected. There was like an expectation of about 19.7% unemployment for the US, but it came out around 13.7, 13.5 or something along those lines. So the data is quite bullish. I mean, yeah, look, 13% is still bad, but it's not 20% bad. It's not this economic doom and gloom people were expecting. Albeit, I still think the US market is well overextended, and this is just merely a sentiment push. A bit of a relief rally. I don't expect a full V-shaped recovery, and if it does, well, great. If not, then I suspect some sort of resistance around here, whether it's this fib level here at 78.6 or this major trend line here at around 27.8k. Now, I suspect there's going to be a bit of resistance around here, that it's not going to be this massive pump all the way up to new highs. And look, if it does, then, well, I got it wrong, I guess. But pretty much it's looking like small cap season, mid cap season. Things were pumping on a Friday in June. Now, that's how weird things are at the moment. End of financial year, capital gains losses are a big thing. So that's where all that sell pressure comes from. So to see a mid cap or a small cap stock moving on a Friday in June is kind of unusual. Statistically, historically anyway. So we got SRG here, and it was moving quite nicely. We can see on the 15-minute chart here, volumes, and I've got to fix this chart here because it doesn't draw correctly when I change the time frames. The resistance is there. So it broke out quite nicely. We can see on the 15-minute chart here, there's a nice big volume that broke it to the upside, and that was at 21.5 cents. So I bought in here at 23 cents, so I do hold this stock. And I did my fundamental research afterwards. I was just happy about spotting a nice breakout. A bunch of stocks were breaking out on Friday. So yeah, so I just bought in. I don't care what these guys do. They could sell donuts. They could clean toilets for a living. I don't care. As long as the books are good and the technical analysis is great. So the TA is pretty basic. These guys have a nice sort of history of just clean breakouts, really. So any major resistance usually ends up a continuation. Just real quick, the resistance level is this pink trend line. I don't expect it to hit there tomorrow. That'll be a pretty big push. But if it gets there in the next few days, that could be a good 20% ride. Anywhere along this pink line is resistance. More realistically, it might come back down and retest this breakout here at like 21.5 cents. That's a more realistic thing that could happen. So it could just open up, come back down, and then move back to the upside. These kinds of stocks, when they're above 100 million market cap, the continuation really isn't always that strong. And it takes a few days to get there. But this is more of a safe trade. It's not one of those day trades or anything like that. It all comes down to watching the volumes on Tuesday when the market opens up, because it is a long weekend. Monday's a closed market. So yeah, so look, if it rallies, it rallies. If it doesn't, then whatever, it'll get there in hopefully a week. That's my expectation. There's no guarantees, of course. So let's have a look at the fundamentals. Real quick, we've got just some basic stuff. This is the Appendix 3B, half a billion shares, so that's pretty nice and standard. It's got 102 million market cap based on the number of shares, multiplied by the current share price of 23 cents. If we move on to the fundamentals, the financials rather, these guys have got 33 mil in cash. They don't produce a quarterly documentation, but they do have a half year, which is this document here. And the last half year shows they have an equity of $256 million. Now, these guys are growing. I believe it was 500 million was their revenue for last year, and this year it's now $750 million. So they're growing from a revenue perspective of about 42% in growth. Now, you might be wondering, well, their equity is not growing that much, and if you compare their financials from one year to the next, you'd be like, well, hold on, they're not really moving that much, but in fact, they're spending their cash on working capital to generate more revenue. So if you want to dig further into that, go right ahead. But these guys are pulling in 42% revenue growth, which is brilliant. So we've got 100 million market cap stock that's on a breakout and has 256 million equity and generates $32 million worth of EBITDA. So these guys, I guess if I was to put a market cap valuation, a reasonable market cap valuation, and this isn't financial advice or anything like that, this is just an opinion, I'd put them at around just under $300 million in market cap. But one would ask the question of, well, why aren't they there yet? Well, because two things. One, COVID-19. Two, speculation. So this company appears to be in the mining space. They don't do mining themselves from what I've seen real briefly. These guys provide services to miners or mining companies. That's what I gathered. But again, I don't care what they do. That's just a real brief look at the sort of type of company that this is. So you get some sort of feel of what they do. If we zoom out, we can see here during the COVID-19 pandemic, these guys have dropped from 37 cents down to 17 cents. So that's quite a hell of a drop. And you can see there was some sort of attempted bounce and recovery, and it just failed for whatever reason. So if we go to 23rd of April, and we can spot what kind of action happened there, and we can see the COVID-19 report as well. So let's see what their guidance says. I haven't actually looked at the guidance, so this will be a bit of a new thing for me. So 23rd of April, it turns out there really wasn't much. Yeah, there was no news around this time. So really the last piece of news was here in March. It was the end of March, around here during this recovery space. So this was all purely a technical move here. It hit this horizontal by the looks of it, and then it just decided to drift down. For reasons unexplained, there's no news announcements to suggest why it would sell down. So if we have a real quick look, put in a number of measures for the pandemic. So they continued to deliver services, that's fine. Obviously they put in some things to mitigate, or some initiatives to prevent COVID-19 spread. There's some government uncertainty, apparently. So I guess people can be concerned in that respect. But it looks like every other company in the ASX, they've withdrawn their earnings guidance, which is perfectly normal. They're in a good financial position. Like I said, they've got 32 million cash in the bank at the moment. So they've got a hefty amount of cash. That makes up 1/3 of their market cap at the moment. So they're 100 million market cap. They've got an equity of $256 million. And $30 million of their market cap is pure cash, which is really quite interesting. So if we were to take the cash out, let's say they've got 70 million left in terms of just business value, excluding cash. And they've got an equity of 256. And if you take out 30 million there, you've got $226 million of just pure equity, excluding cash. So it does really feel heavily undervalued, in my opinion. So I don't see any real reason other than just a lack of interest, perhaps a technical sell-off. But it's done a really nice, strong volume reversal. And the important thing to note here is it's on high volumes. This isn't just a weak volume breakout, and it looks quite nice. So even though I personally think that it's worth around 3x, just a little under 3x, which puts it at around 60 cents. That seems a bit out of reach. So I would be happy with anywhere at this resistance. I would probably take profits. I'm looking maybe about take 50% profits if it hits this trend line here. And I'll just wait it out and probably look for something around this horizontal here. I'm kind of just talking through my targets at the moment because I haven't actually established it because I'm not in a rush. So you can see where my thought process is for sort of a midterm trade, just my targets, setting my targets and looking where to exit. But straight off the bat, I always take profits on the table, off the table, on its way up. So here, pink trend line is a resistance, take half. And look, if it sells back down, then great, I've taken half my profits. Fantastic. And if it goes to the upside, well, fantastic. I've still got half of my holdings left. So that's how I execute my sort of short to mid-term trades. I don't expect this to really be a long-term trade, but we'll see how it goes. Anyway, that's pretty much it for myself. Hope you enjoy. Cheers, guys. And keep in mind that do hit that subscribe button, helps me out. And check out my Patreon page. Cheers, guys.